Welcome back. Joining me with more insight on the day's trade is Phaswane Mphahlele from Makwe Fund Managers. Phaswane, thanks so much for joining us today. Now, it's been a busy week. We've had, talks around tariffs. We've also had earnings coming through, as well as that labor market in focus in the U.S. with the non-farm payrolls out. As we get started, just walk me through your assessment of trade this week.
Well, hi guys. Looking at the market, it started off with a bit of volatility when it started off the week, where we heard Trump trying to come up with tariff plans against these neighboring countries, and including China there. But they found middle ground with neighboring countries proceeding with China. And while we found China's retaliation to these things being more selected, it has calmed markets and worries about if this trade could gain momentum. And this eased markets, seeing a relief rally across different global markets. We've seen some central banks also cutting rates, providing some support in the likes of Europe here. But then the more key thing that took place that showed a bit of concern back in the market is when we saw the likes of bond yields coming down. They breached the 4.5%. We see oil prices going below 75, and just reflecting that demand concern. And while inflation is still considered to be on the rise, putting the stagflation worry. But right now, with the current labor numbers that are coming out, the market is digesting them and deciding whether it is a stagflation worry or not.
All right, let's move over to some of the tech earnings that caught our attention this week. Amazon out with numbers. That report quite mixed, but I think what spooked market the most here was the outlook. What did you rather make of that report?
Yeah, well, Amazon report, yeah, you're correct. It's mixed. They did a beat. Revenues are well supported by those retail sales, offsetting some of those missed estimates around the cloud business advertising, but still relatively well. Markets, yes, are concerned about the outlook because the guys mentioned that they will be around the mid-range, and that is below the estimates that the analysts had. And I guess it goes to the fact that the guys still see the issues around demand, having to deal with the fact there's a tough competition around, there is a price pressures, microeconomic uncertainty they have to deal with, but they're making efforts in terms of having to now invest in AI and cloud businesses with 100 billion there, and they should continue to position them to recapture what they lost, and should be well off.
Do you think the spend from tech companies, US tech companies in particular, the AI spend is warranted, considering what we've been seeing out from China and DeepSeek, them showing that, this CapEx can be cheaper?
Yeah, well, I'm still leaning on the fact that, to some level, it's still warranted. The guys have been moving at this scale, and that's because they've been projecting the size of their projects, that it should be very helpful looking at the size of the economy. But yes, reviewing them going forward is something that they should be starting to look at, because we have seen coming from China with its DeepSeek that things can be done at a different cost, with more efficiency. And that's why some of these semiconductors have been falling under pressure because of these developments, like the likes of Nest and NVIDIA.
And we saw NVIDIA really crashing at some point last week. Let's move over to some local news. I want to start off with the local units. The Rand steadily recovering. The last time I checked it, it was around that 1840 level. Is the strength perhaps on the back of last night's SONA, or are we just seeing a dollar weakness story?
The SONA did contribute, but I don't think it's something that made headlines. The guys continue on the same messaging we've seen in the previous years, unlocking growth, focusing on reforms around energy logistics. They've added more municipalities, which is good. They are focusing on hitting that investment. And it's a more primarily investment-led growth, and it could be achieved. We just have to wait on that execution. And that's why budgets would be more interesting to see going forward. But dollar, we saw a bit of dollar movement yesterday, going up on the higher end and reflecting some buyers in it. And while the rand did show some strength at the same time. So a bit of contribution there, but I think the rand, the local story is having a growing story that is still not fully priced in, and that's why we could see the rand even creeping closer and closer to the 18 rand level.
Let's move over to some company news. Goldfields forecasting earnings growth of up to 47%. I guess this kind of upbeat performance expected, right? Considering that production has been ramped up at Salares Norte and gold prices continue to trend higher.
Yeah, well, yeah, Goldfields did well. They're moving in the right direction. Good recovery thanks to that gold price. It's always been a primary driver. They'll observe some of those challenges they've seen over here in terms of production, increasing costs. But seeing those recent last quarter numbers, it's been encouraging because they've increased production. Now they've seen costs coming down, and that if they keep up this type of momentum, I think the investor confidence will continue to grow. But investors also will be keeping an eye on that cost base. What's going to happen to it? Will they manage it well?
And Anglos was also out with an update yesterday, right? And we saw diamond production coming under pressure, copper production coming under pressure, as well as some of their units, Amplats and Kumba not doing well. That story, it's just downbeat. It's really just downbeat.
Yeah, no, it is downbeat, and it just goes down to their primary drivers, those prices in these commodities. We've seen a bit of a down cycle taking place, but it looks like that these current efforts, the central banks making efforts to cut interest rate, inflation seeming to re-accelerate in parts of the world. We're still waiting for China's efforts that these commodities will make a change for June. The bottom is probably at the back of us right now. In the meantime, they just have to investors have priced in most of these weaknesses and should start looking forward to the more bright spotlights that companies will be recovering from.
We're crossing fingers for that and hoping it happens soon. Before I let you go, can I get your stock pick for the day?
My stock pick for the day, I'm going to go with Phaswane. Looking at the guys' current valuations, I think it's a good spot to be starting to incrementally increase your position. The guys have an opportunity to give us some good gains in the short term, and this is at the back of the fact that they'll be benefiting from the fact that there's an inflation rising in a positive manner, along right with growth, which benefits their business. Their corporations will reflect that going forward. We're currently seeing it reflecting some of it in the rand. And yet they're picking it right now. It should be a good bet going forward.
First round one you're looking out for. Phaswane, thanks so much for joining us and taking us through the day's markets action. That was Phaswane Mphahlele from Makwe Fund Managers.